Difference between a private company and partnership. Registration is compulsory in case of a private company, whereas it is not compulsory in case of partnership. In case of a private company, the minimum number of members required to start the business is 2 and maximum number of members can be 50. In case of partnership, you require minimum 2 members. However, the maximum number of partners that the business can have is 10 in case of banking and 20 in other cases. So if a partnership is formed to run a banking business, then such a partnership can have only maximum 10 partners. And in other cases, the partnership can have up to 20 members. Private company has a separate legal identity. In case of partnership, there is no separate legal identity. In other words, in case of private company, the firm and the owners are two separate entities in eyes of law. But in case of partnership, the law does not consider owners and the business separate. They are considered as one and the same entity. A private company is governed by Companies Act 2013, whereas partnership is governed by Partnership Act 1932. In case of private company, the liability of the owners is limited, but in case of partnership, the liability is unlimited. So in case of partnership, if the business assets are not sufficient to pay off the business liabilities, then personal assets of the owners can be used to pay off the business liabilities. The private company is managed by board of directors who are appointed by the shareholders or the owners of the company. The board of directors run the business on behalf of the owners or the shareholders. In case of partnership, however, the management is done by the partners or the owners themselves. The audit of private company is compulsory, whereas in case of partnership, the audit of accounts is not compulsory.